Hey guys, Sarah Berry CPA. Today is Thursday, June the 4th, and I'm doing this video to explain the EIDL loan offers that many of you guys are getting. So before I dive off into that, I want to remind to you guys what the EIDL is. The EIDL is EIDL, Economic Injury Disaster Loan. So that is part of the SBA. That is completely different than the PPP, okay? So the EIDL, remember when all of this first started, March 27th, the CARES Act passed, and we thought it was going to be $10,000 for every business. Well, we applied for the EIDL advance for you guys. And I told you then, this is an application for a larger loan. You will eventually get an offer for the EIDL loan. You can turn it down or you can accept it. That's what this is. So if you applied for an EIDL and you had one employee and that was yourself, your sole proprietor, you should get $1,000 into your bank account. Most of our clients have received their EIDL advance now. It's been 2 months and most of them have gotten it. So if you received your EIDL advance, then the next step is you are going to get an email from SBA. Remember, the EIDL advance is a grant and it does not have to be paid back unless you got the PPP. The EIDL advance, if you receive the EIDL advance and the PPP, then you're going to have to pay the EIDL advance back. And what's going to happen is your PPP forgiveness is going to be reduced by your EIDL advance. But if you just got the EIDL advance, you don't have to pay it back. Then when an SBA loan officer gets your account and they continue processing the larger application for the loan, you're going to receive an email that looks something like this. Create your SBA Economic Injury Disaster Loan Portal. Okay. A lot of you guys have received this. I received a lot of questions and I should have done this video 2 weeks ago to not have to explain to you guys an email over and over again, but better late than never. So you receive something like this. I would advise you go ahead and set up your portal, and then it's going to say this is what you're offered. So you can be offered anywhere from the lowest amount I've seen is $4,000. The highest amount I've seen is $150,000. I really have no idea how they're determining these amounts that they're offering. But remember, this is a loan. When you get an email like this is a loan. It is different than the EIDL advance that doesn't have to be paid back. And it's different from your PPP, which is a loan that we're going to get forgiven, hopefully. Okay, so this particular email when it comes in is an economic injury disaster loan. Okay, now that we've got that established, just know you're going to have to pay it back. Now I'm getting the question of, do I need to do this? Do I need to go ahead and get this loan? Well, do you want a loan? Do you need a loan? What would you use a loan for in your business? Are you looking at getting a loan anyway? Those are all questions, so it's going to be an individualized client-by-client decision as to whether you think it's in your best interest to get this loan or not. So now I want to walk you through some loan documents for a client of mine that took the EIDL loan at $150,000, I believe that's the max. I want to walk through some of the fine print with you and make for sure you're fully aware of what you're signing up for if you get this EIDL loan. Okay, so I redacted any client-sensitive information, but you would see something like this here. Now, the very attractive thing about these EIDL loans are it's 3.75% interest over 30 years. And if you check the box you want it, typically you're going to see it show up in your bank account within 2 to 3 days. So it's really quick, anywhere between $4,000 to $150,000. But I want to go through the fine print with you quickly here and make for sure you understand exactly what you're signing up for. So this particular individual had the maximum amount of the loan of $150,000 and the payment amount I believe was $751 over 30 years at 3.75% interest rate, which is a great interest rate. Now, you get to the part about collateral. If you're getting a loan for less than $25,000, then you don't have to have any collateral. If you're getting a loan for more than $25,000, then there is this paragraph in there about collateral. Now, nowhere are you going to have to send, definitely no personal assets are collateralized, not your personal house. There's all kind of things going around the internet of, well, I don't want to get this loan for $150,000 because they're going to put a lien on my house. No, they're not. It's not personal asset, it's business assets. So it tells you here what kind of assets would be collateralized. It's assets that you own now or shall acquire from the funds of these proceeds, okay? Tangible and intangible personal property, including but not limited to your business inventory, equipment, notes receivable, accounts receivable, cash accounts, and things like that. So the thing about it is, when you sign this box, you're not going to have to send a copy of your depreciation schedule with a list of all your equipment to it. So you don't have to give them your VIN numbers and all of that on all of your equipment, but you're saying, if I don't pay this back, then SBA, you have the right to come put a lien on this equipment and take it over, okay? Okay. It says the borrower will not sell or transfer any collateral. Well, they listed collateral as any deposits accounts or accounts receivable, equipment. So if you sign up and get this loan, and then you have equipment on your books, let's say you have a dozer, a backhoe, an excavator, thinking about a construction company, you have all of this equipment on your books, and then it says that you can't sell that because they have a lien on it. I guess the SBA could enforce that. Just know that you are signing up for that, and it says that you can't sell it. I seriously doubt they're going to come in and audit. They're probably going to audit maybe 1%, but I really don't know. I just want you to know this is in the fine print, and if you sign up and you say that I'm going to get this SBA loan for $150,000 and I'm not, and all my equipment is listed as collateral, and I'm not going to sell anything, so that's what you're saying. It says the loan can only be used for working capital to alleviate economic injury caused by COVID, is what it's saying. So what is working capital? Well, coming from a technical standpoint, from a CPA, working capital is current assets less current liabilities. So if you increase your cash, you're increasing your working capital. If you decrease current liabilities, you're increase your working capital. So I'm getting the question from clients of, I have loans with high interest rates on them. Can I pay them off? It doesn't specifically say that you can pay them off, but it doesn't specifically say that you can't. My personal opinion, it's probably okay for you to go ahead and pay off these large interest rates on the loan. So we haven't gotten any guidance that says otherwise. It says that it's used solely for working capital. And if you're paying off high interest rate business loans, not personal loans, but business loans. Remember, these funds are for business purposes. The last thing I want you to do is to get this up to $150,000, put it in your company. It's automatically going to go in your business account, and then take a distribution and use this for personal funds. That is a no-no, definitely. If you got looked at by the SBA, you would get in trouble for doing that. So remember, you want to use this for business purposes to generate income, okay? All right, it says that you will obtain an itemized receipts for how you spend these loan funds, and you're going to keep these receipts for 3 years, okay? All the way through the life of the loan, I believe. 3 years from the date of final disbursement, okay? So you're going to be able to show them what you use this money on if they ask, okay? The borrower will not use directly or indirectly any portion of the proceeds of this loan to relocate. So you can't use this to move your business. You're agreeing to only buy American-made equipment. Now, this fourth bullet point here, it says that if you want a loan increase, you can come back within 2 years. I have seen multiple cases of clients, they get offered $150,000. They're scared of the collateral requirement of $25,000, so they go with $24,000, and then they decide later, gosh, I really need that $150,000, and they can't figure out a way to go back and get that full amount. So if you think you might need that $150,000, just know If you need it, you need to go ahead and get it for the first request, because it says you have 2 years to come back, but I really don't think that you're going to be able to come back and get an increase to the loan. So just be aware of that. Let's see here, that's all pretty standard. Books and records, okay, so if you're my client and you're getting this video, then hopefully you should have a good set of books and financial statements. You're filing your tax return on time, so this should not be a problem. Just to sum up what this section says here, you're agreeing that you will keep good financial records, you will keep books, you will be able to produce a financial statement. If they request it, you will be able to produce tax returns if they request it. It says the borrower, you, will furnish to the SBA no later than 3 months following the end of the fiscal year the borrower's financials, but it says the SBA may require. So I really don't think if you're getting a $10,000 loan that you're going to have to produce financial statements for SBA. Now, if you're getting a $150,000 loan, if you're at that level and you need that much operating capital, you should have financial statements without a doubt, and you should be able to produce that within 90 days after the end of the year. So that's all the more important that you have a good accountant, a good CPA like us that's keeping your books and keeping everything up to date, and basically almost at a moment's notice you can be able to produce financial statements. Also says, this one's a little more concerning, that upon written request the SBA can tell you, the borrower, that you have to produce an accountant's review report. Well, a review report's almost like an audit, and on average it's about $3,000 for a CPA like ourselves to come in and do a reviewed financial statement for a business. So I really don't think the SBA is going to come in and truly require an accountant's review on every single business that gets these loans. I don't think that's really going to happen, but could it happen? Yes. Upon written request, the SBA could. Now, if you do not make your loan payments on these, if you're not making them on time, if there's any reason for them to think that you're going to default on these loans, be aware they have in the fine print, they can throw the book at you. Okay, distribution of assets. The borrower will not, without prior written consent, make any distribution of the borrower's assets. So that means you can't take any cash out. Make preferential treatment, no advances, no bonuses to any owner or partner or any of its employees. So basically what it's saying is, I don't want you to get this $150,000 and turn around and distribute it out to yourself personally. Now, if you take this paragraph at its literal interpretation, if you receive $4,000, you can't take a distribution or a paycheck. I think that would be an extreme case, and the SBA would have a hard time enforcing that on all the amount of these businesses that are getting this loan. Just know that in the fine print, it says that. So I just want you guys to be aware of what you're signing up for. Certifications, there's nothing here that's really catching my attention, and I really think that is the gist of what I wanted to point out to you guys. Nobody's doing any lobbying. Yeah, there's several pages here. This is the actual promissory note. I think that is it. Okay, so in summary, let's see my notes here. You don't have to offer a proof of assets for your collateral in order to get this loan. From the time that you complete the offer and you apply for the larger loan, it takes about 2 to 3 days to get your money coming in. There are no payments for the first 12 months, and then it is spread out over 30 years at a 3.75% interest rate. I hope you understand the difference between the EIDL advance, which was the initial amount. It is a grant and doesn't have to be paid back. Unless you receive the PPP, it does have to be paid back. The difference between this particular email here and this offer is this is a loan, and it does have to be paid back. And then we're not for sure if you can actually take a distribution or not. I think it's probably okay as long as it's not extreme. The main thing is, if you get this loan, you need to be able to use it and show that you used it in the business as working capital, investment to produce future income for your business, okay? I think that pretty much wraps up everything I wanted to go over with you guys. Stay tuned for a PPP update. As you guys know, there's a lot going on with that, and hopefully I'll be doing another video tomorrow to have some good news and advice for you guys. Talk to you later.